Ladies and gentlemen, good day and welcome to Gujarat Narmada Valley Fertilizers and Chemicals Limited Q3 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitesh Waghela from Anurag Services, LLP. Thank you, and over to you, sir.
Thank you, and good afternoon. Welcome to the third quarter earnings conference call of Gujarat Narmada Valley Fertilizers and Chemicals Limited, hosted by Anurag Services, LLP. From the management, we have Mr. D.V. Parikh, Executive Director and CFO, Mr. Y.N. Patel, Head of Operation and Maintenance, Mr. A.C. Shah, General Manager and Company Secretary, Mr. Tejas Shah, IP Marketing, and other senior dignitaries from the management. I would like to thank the management for giving us the opportunity to host this call. We will begin the call with opening remarks from the management, post which we will have a question and answer session. Thank you, and over to you, sir.
Ladies and gentlemen, this is the operator. Due to some reason, the line of the management has been disconnected. Please stay standby. Ladies and gentlemen, we have the line of management connected. Sir, please proceed.
Yeah, good afternoon, everybody. And thank you, Anurag Services, for holding this call. And welcome to all the investors and analysts who have joined this call. First of all, we'll touch upon some of the general points of the environment. In terms of the economic environment, the prices on both the sides, both input as well as outputs, are softening in general. That is, considering the less aggression of the war which is going on. Secondly, at the beginning of the month, there has been an union budget where the momentum has been that of more on the emphasis on capital expenditure. If you talk about the impact on the company in terms of the budget proposal, there are no significant changes in corporate rate, taxation rate, as well as indirect tax, which is GST. So from the budget perspective, there are no major impacts which is coming on the company as such. While you talk about the operating performance, the production and sales level mainly, the production for the quarter, if you look at on a sequential quarter basis, has been up by around 24%, and sales has been up by around 18% in case of chemical, whereas it is down by 8% and 10% respectively in case of production and sales respectively for fertilizers. On a YOY basis, on a 9-month basis, also the production and sales have improved. The production has marginally improved by 2%, whereas the sales have improved by 6% in case of chemicals. Now, some of the major products where there has been an issue of increasing inventory are basically aniline and TDI, which is contributing apart from ammonium nitrophosphate, which is a complex fertilizer. Where the stock levels have been high during the quarter as compared to the last quarter. In terms of the production rate also, there are a few products where we did not produce mainly because of the market reason in case of aniline and methanol, as well as at times the complex fertilizer. From the operating perspective, the TDI Dahej plant has been affected because of the operational issues. So this is on the operating side of it. Overall, there is an increase which is reflected in the P&L of around 40 crore rupees, mainly because of the chemicals I narrated. While we go to the profit and loss account, things are already now in the public domain in terms of financials, that we ended the quarter with around 2,673 crore of revenue, which is the highest ever for the quarter. And for the nine months, also the revenue and profits are highest. Around PBT is around 1,515, apart from the top line of around 709,000 crores around it. So this is on the profit and loss. Apart from that, within the groups which are there in the reporting lines of profit and loss, there are two main important line items where expenses have had a significant variance. One is the personnel cost and second is the other expenses. Personnel cost has gone up, as you know, because there is a note also in the footnote to the results that because of the wage settlement, there are certain provisions which are made and which is creating an impact on the personnel cost. There is a one-time impact also which is there because of the past service cost. So going forward, at least from April onwards, it will be annualized effect of the normal wage revision because all the past service costs will be accounted by end of this financial year. As far as other expenses are concerned, there are certain provisions which are made for the contingent part of the liabilities in line with our practice adopted last year, because of which the other expenses are higher. When we go to the other second part of the profit and loss, which is other comprehensive income, there are two significant changes which are there. One is because of the past service liability relating to gratuity, the other comprehensive income is affected. And second is the valuation gap in respect of the mainly unquoted shares, which is impacting the OCI. Going to the balance sheet, there are two significant changes. One is in respect of investment, which has increased mainly because of this change in the investment pattern as per the approved policy. And the second is the overall cash accumulation with the accrual of the profits. In terms of contingent liability, there are no major changes in the contingent liability as such, and company continues to recognize the same contingent liability as before. So this is on the balance sheet side. In terms of the cash flow, like with the accrual of cash profit as well as depreciation accruing, there is a significant cash which is generated during the quarter to the tune of around 500 crore plus. There is one major announcement in the budget with respect to subsidy. As compared to the last year's subsidy, which was budgeted subsidy of 153,000, it is now at a level of 225,000 crore rupees. This year, the subsidy burden is expected to be around 250,000 crores. As you know, the initial budget was 105,000 and the revised estimate is around 225,000 crores for budget. So we would like to take on record the contribution of Government of India in releasing the subsidy, because normally subsidy used to be in areas except for the last 2 years, and in spite of the increasing feed cost, the subsidy is being released and liquidity is maintained for the company as well as the players in the industry. This is on the cash flow part. Apart from that, there are like segment assets and liabilities, if we go by, which are reported. There is significant change in case of fertilizer assets, mainly because of the fertilizer subsidy-related areas. If we compare on a Y1 basis and if we compare on a sequential quarter basis, there is an improvement because of the liquidity. There are no significant changes in the assets and liabilities otherwise of chemical as well as fertilizer. In terms of unallocable assets, the assets have increased mainly because of the cash accrual. So this is what all and leave the question answer.
We're sorry for the inconvenience of keeping you on hold.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, we will wait for a while as the line of the management has dropped. Please stay on standby. Thank you for your patience. Ladies and gentlemen, we have the line of the management connected, and we take our first question. Our first question comes from the line of Nirav Jimudia from Anvil Research. Please go ahead.
Yeah, good afternoon, team. So I have 2-3 questions to ask. So first is on the ammonia side. So if you can help us explain what is our ammonia production for the chemicals business, because we produce ammonia one through natural gas and one through oil. So if you can guide us in terms of or help us explain how much we have produced ammonia for the chemical business for 9 months, and what was this figure for FY23?
See, I'm Vayan Patel answering your question. Normally, we produce around 1100 metric ton of ammonia for producing neem urea, and around 800 metric ton we produce for oil-based IP products, which contributes to ENP also.
Okay.
So capacity utilization for this year is around 155% capacity utilization of ammonia we have achieved.
Okay. So this
so it is in the ratio of 60 to 40, you can say.
So this 155% you mentioned is for oil-based, or it is combined together?
This is combined together. But if you want individual figure, I can give you this cumulative production for gas-based ammonia. You are interested in ammonia, right?
Yes, sir. Yes, sir.
Yeah. So ammonia is 130. Sorry, I was referring to monthly production. This year is 607,000 is for this total figure. Out of this, 353,000 is gas-based ammonia, and balance is oil-based ammonia. So it will be around 250,000.
Okay. And this 250,000,
I will give you the exact number. See, normally 800 metric tons, like Mr. Vayan Patel said, per day we manufacture. On a 9-month basis, we have produced the oil-based ammonia, which is mainly for chemicals, of 224,000 metric ton. Is the figure for the 9 month ending December 22.
Correct. And so this also includes what ammonia goes for your ANP, right?
Yeah.
Yes, you are right.
Correct. Sir, then if we just do some calculation. I think the furnace oil or the oil requirement for this ammonia is roughly 2.5x of the total ammonia production, or it is slightly lesser?
See, we consume 250,000 metric ton per annum of oil, which is meant for the supporting the oil-based ammonia.
Correct.
We normally don't use this as a fuel. This is a feed.
Okay. Correct.
It is not actually furnace oil, it is fuel oil.
Yeah, it's fuel oil. Sorry, my apologies. Yeah. So proportionately for 9 months we have reduced, or we have used fuel oil to the extent of our production, right?
Yeah. See, our consumption for oil is about, it varies from 0.72 to 0.75 roughly.
Correct.
So that is a factor, our consumption of oil based on oil-based ammonia we produce.
Got it. So second question is on AN melt. So, sir, this AN melt is produced as a byproduct of ANP, or we have a separate production process for AN melt?
See, we have two streams. Around 400 metric ton we produce as a byproduct, and about 165 or so we have additional capacity where we can additionally produce ammonium nitrate melt.
We can also produce independently the AN melt in case nitrophosphate complex, especially the complex fertilizer, is down.
Correct.
There is a maneuverability as far as the operating process is concerned. Overall, we can manufacture, like Mr. Patel said, 400 is the normal one. Roughly 61% of the total ANP we get AN melt. Apart from that, we get around 160 to 165 metric ton on a regular basis, even when the ammonium nitrophosphate plant is on. Supposing it is down, then our AN melt would be higher, even after taking the total of these two by a factor of 70 to 80 metric ton per day.
Correct. And WNA goes for our ANP, right?
As well as weak nitric acid goes for concentrated nitric acid also.
Absolutely. So our DNA plant is supposed to start in Q4 as per our presentation. So last year, in one of our call, you mentioned that we sold something around 112 or 115,000 tons of WNA in the market. So if you can walk us through what was the similar figure for 9 months of FY23, and once this 50,000 tons of CNA gets commissioned, how much this WNA which is getting sold in the market would be consumed internally?
Okay, when the CNA, the new capacity coming up is 50,000 metric ton per annum, and this there is a plan to manage the WNA so as to produce concentrated nitric acid, not to lose the market. In case there are any difficulties, the plant will be operated based on the contribution margin on a per ton basis, based on the product mix priority.
Correct. And sir, if you can walk us through how much WNA and CNA was sold in 9 months of FY23, that would be helpful.
Introduce.
I'm Tejas Shah from marketing.
Yeah.
In FY22-23, we sold market in WNA 84,500 tons on 100% basis.
Okay.
And CNA 28,200 tons in the market.
Okay. This is also on 100% concentration.
Oh, yes.
Okay. This is for 9 months, right?
9 months.
So the last question is on the TDI part. So I think the prices have slightly improved vis-a-vis Q3. So last quarter you mentioned that we were incurring the losses on the TDI side. So we incurred losses in FY22 also and for the first half also. So what was the capacity utilization in Q3? Had we also incurred the losses in Q3? And if yes, what is the situation currently? So are we making profits on TDI in Q4? So if you can just help us with this.
There are two production facilities. At Bharuch complex, yes, we are making profit. At Dahej complex, no, we are not making profit. We supported the market even at the cost of contribution losses, but with the improved situation, there are positive margins in the TDI too.
Okay. Sir, what was the capacity utilization for Q3 for both the complexes, sir, for TDI?
Capacity utilization for the year, if you say it is for Bharuch complex, it is 130%. And the TDI 2, the edge, it is 67%.
This is on the increased capacity of 10,000 tons, which we increased last time. So, the 67% is on the increased capacity of 10,000 tons, right?
No. See, the water capacity is saying is based on the capacity which was earlier, which is 50,000 metric ton. The 10,000 tons which was added because of the introduction of the new unit of LIST lifts is not part of this.
Got it. Thank you, sir, and all the best.
Thank you.
Thank you. Our next question comes from the line of Ashish Agarwal, an individual investor. Please go ahead.
Hello. Am I audible?
Yes, clearly.
Congratulations for great set of numbers. Basically, the first question is on the gas prices. While I see that there is a lot of reduction which has happened in the international market on gas bit, when does it reflect in our P&L, and how does the gas bit go for GNFC as to the procurement process, the price, etc.? Hello?
Yes. See, gas prices have started coming down recently.
Yeah.
Okay. So Q3, it is, as compared to Q2, yes, it has tapered down, both for oil as well as gas, not coal. But the true reflection, actually, if you see, is also getting, it is showing up in the P&L when you look at the numbers of a sequential quarter, Q2 versus Q3. But as it is continuously moving down, the further betterment should get reflected in Q4.
So, sir, how much can we expect there? Can we have some numbers like what was it at the end of Q2, what was it as an average in Q3, and what it is running today as a unit only? I do not want amount, but because it is price sensitive, maybe at a per unit, the price on Q2 as an average, and what was it at Q3 as an average, and what it is today?
See, gas, as you know, we procure on a spot basis for chemical, okay? Like the last month, December, it had range around 57 rupees per standard cubic meter. And every month it changes, okay? Currently also, like January also, we bought at more or less the same price with 2-3 rupees here and there.
Okay. What was it in Q3 as an average?
Q3 average, immediately I don't have the average number of gas price on Q3 basis, but the December and January is what I have immediately.
Okay. And like someone said earlier on the TDI prices, while I understand that it takes time, what I could see is in international market like China, the prices have surged from the base of TDI to about say 20-25% higher, while Indian prices, what I can see, has surged only around 10%. So how does it translate between international prices and our prices in India?
I'm Tejas Shah. You are right. China market is improved a lot, but it shows around 20% increase. But other international markets are improved just like 10%. Earlier, Indian market was around 2,300 USD per metric ton. Now it reached up to 2,700 USD per metric ton. So slowly effect is coming in all other markets.
Okay. So you are saying in coming days we might see that impact?
it depends on the supply demand side. If the demand is weak in particularly China, because China is the major producer of TDI, so they will throw the material in all international market. So all depends on the supply demand side. No doubt, presently the market is in improving trend.
Okay. Another way of looking at answer to your question is, if you look at the normally spread between toluene to TDI, it is one of the lowest over last 12 months. That is December 21 to December 22.
Okay.
So there is a potential, but finally, like Mr. Tejas explained, it is a market driven by more than one factor. But if you go by the key factor, which is of a spread, then it is one of the lowest as of now. That's standing at around 60%.
Okay, got it. Last question is on CapEx. While we have done a lot of announcements in last quarter as well as last quarter that we are working on polycarbonate and other CapEx projects, what is the real progress which has happened in last 6 to 9 months on these projects?
Regarding
okay, we made various announcements. You are right. We made quantified announcement with respect to all except cracker and polycarbonate. As far as polycarbonate, which was around 2,700 crore of project, and cracker, which was 5,000 plus crore of projects, the EFR level work is already on with Engineers India Limited. They are working on, and this calendar year they are going to submit the report on both the products. As far as rest of the projects are concerned, CNF4, like we already said, it is going to be commissioned sometime in the mid of this calendar year. As far as CCPP project is concerned, which is to the tune of 613 crore of investment, the alloy, the work is already awarded and work has started. As far as other investment proposals are concerned, which is the ammonia makeup loop, the order is already given and they are in the final phase of arriving at the formal agreement. Weak nitric acid in AN melt, which is an investment of around roughly 1100 crore, is also on schedule, and the TEFR is expected to come by June 23. So these are the major one which we captured and which we announced last time. As far as green hydrogen and solar capacity for supporting the green hydrogen is concerned, we are awaiting certain clearance in terms of the GOI policy initiatives. Once that happens, we'll decide about our investment. Although in principle, we have committed ourselves that we will definitely invest in green hydrogen as well as green ammonia. So these are the major ones which are on the cards.
Okay. So if I may ask my last question, which is around fixed income that we earn from the investment that we do with the financial institution, which is Gujarat based. Earlier, some 2 quarters back, we said that we make our investment at 5.5% or 6%, while the rates have increased a lot. Does that number also increase?
Yes, see, finally, we decide about the investment looking to 2 aspects. One is safety and second is the yield. Okay. So Gujarat State Financial Services is just one of the avenues out of many avenues we have in our approved investment policy. So as long as the safety is concerned, safety is not compromised, we do optimize the returns. To answer your question, yes, we have invested in higher yield securities.
Okay. Thank you. That answers my question. Thank you for taking all the questions.
Thank you. Our next question comes from the line of Bhavesh, an individual investor. Please go ahead.
So thank you for the opportunity. My question is partly answered. So just wanted to elaborate on the. So what is the cash in hand at this moment? I mean, in terms of deposit or reserve. How much is the cash in the books?
Yes, 3,400 crores.
3,400 crores. Okay. And sir, particularly, I'm seeing that the margin has been reduced because of many reasons. So is one of the reasons is also because of our inventory? Like we have more inventory than.
No, it is not like that. First of all, the absolute margins are definitely higher, as are apparent in the profit. What you are looking in terms of percentage is lower because the top line has substantially increased. Okay, so if you look at the margins, it is overall higher at PBT level. Now let us dissect yet further into the chemical as well as fertilizer. Fertilizer has improved, whereas chemical has gone down. Okay, but overall still the margins are in absolute terms. This is in spite of the fact of the accruals which we stated at the beginning in the opening remark.
Okay, and any specific reason for decline in the margin for chemical side?
Yes, as we said, on a 9-monthly basis, the margins are still better, have improved. If you look at the tapering down effect on a sequential quarter basis, which is Q3 versus Q2, Q3 margins have gone down because of the general price reductions across the product more or less. The main ones are like acetic acid and weak nitric acid, technical grade urea. These are the three particular products where it has gone down substantially. And if you look at the last year also or the first 6 months, the realizations were way above the normal realizations which are supposed to be there. So they are tapering down. So we got a hit there. But if you look at the input cost also, which is of oil and gas particularly, coal has gone up. These two otherwise have gone down, which has made up the margin. And this is how on a sequential quarter basis the margins have improved. On a 9-monthly basis also the margins have improved. Whereas if you look at on a YOY Q3 basis, the margin in chemicals have reduced. Mainly because of the tapering effect in these three chemicals, weak nitric acid, technical grade urea and acetic acid.
Okay, understood. Yeah, that's all my side. Thank you, sir.
Thank you. Our next question comes from the line of Yash Dantewadia from Dante Equity. Please go ahead.
Yeah, sir, my first question is, what is the asset turnover that you're expecting on the nitric acid plant that's coming up by the end of this financial year?
Okay, you are calling. Yeah, there is some background noise. See, your question we first put in context. You are asking that what will be the turnover from the new nitric acid plant which we are putting up. Is that a right understanding of your question?
Yes, sir. Yes, yes.
Okay, I will request Shri Vayan Patel to respond on this. Meanwhile, let me clarify that we are putting up 200,000 metric ton of weak nitric acid plant. Mainly this will cater to the other plant requirement which is coming up of around 135,000 equivalent of AN melt. So there will be a captive consumption there. There will be a further captive consumption in the concentrated nitric acid 4 where we are falling short of the nitric acid. The rest will be sold in the market. Now I hand it over to Shri Vayan Patel to quantify the number on the expected sales as well as the quantum.
See, it depends on the price. The turnover. Price kitli hai to.
So you could just comment, take today's price in consideration and just comment so that I just understand what this, how much value addition this CAPEX is going to do on our book.
Okay, you can take the broad number like this, that we would be selling in the market additionally around 35 to 40,000 metric ton of weak nitric acid if everything goes well. Which means if all the two plants run at full throttle, which is concentrated nitric acid 4 and new AN melt plant equivalent to around 135. So which will spare around 35 to 40,000 metric ton more of weak nitric acid, which we can sell.
Yes, sir. So what is the asset, what kind of turnover will we get on that?
If you take a price of around 40,000, you multiply by 40,000 per metric ton, that's the normal one. So 170 crore.
Okay, sir. So my next question is, what is your cash in books right now as of today?
Somebody already asked it. I said 3,400 crores.
Also, sir, does the management realize that we are trading, the stock price is trading below its book value, which is very rare for a company that's generating the sort of cash that you do?
Okay, see, we can't comment on whether the price is fairly reflective of it or not. What we can comment is you can take your judgment on the fact that balance sheet is absolutely clean. There are no skeletons hanging in the balance sheet. Okay, so based on that, investor may take a clue on whether we invest or not.
But why doesn't the management take a proactive decision of some kind of buyback? Because you're getting, if you're able to buy back the stock below book value, doesn't that make sense?
We try and offer various options. These are deliberated at a board level. So these are board level discussions, and these are privy to us. So we can't say more than what is there in the public domain. Your point is already noted. We already acted upon it. Okay.
Okay. Thank you so much, sir. Thank you, sir.
Thank you. Our next question comes from the line of Ankur Tanwar, for an individual investor. Please go ahead.
My question is regarding nano fertilizer, which our company is not producing, and Government of India is emphasizing on nano fertilizer. So what quantum of effect it could have on our fertilizer business?
Okay, so nano fertilizer, as you may have seen, is mainly by the IFFCO, number one. It has also licensed, and it is in the process of talking to other bigger companies, mainly the public sector one like NFL, etc., for licensing the technology. We have initiated dialogue with them for licensing the technology to us. Now, if you look at how the replacement is going to happen, the urea demand overall is around 35 million tons in India, out of which around 9 million tons are imported. So even if they replace, the market is, and we are holding around 3% of, less than 3% of the market. So we don't see any adverse impact on our urea market of nano fertilizer. Nano fertilizer will help the country to replace the imported urea if it really becomes successful on a pan-India basis.
Got it, sir. Just a suggestion that we can proactively put up a presentation to LIC because they have been constantly selling our shares for last 2 years. I know management do not have anything to do with share prices, but it would be more better if we put presentation to LIC.
You see, presentation and all, we regularly remain in touch in terms of conference call, in terms of certain physical conferences. We can't go to somebody that you don't sell our share or you buy our shares. It is purely their domain. Whether they require cash or not, we also don't know that. Why they are selling. Whether they are in need of cash, therefore they are selling, or they don't see a value, therefore they are selling. So we can't get into any of these initiatives.
I agree. Thanks a lot, sir.
Okay.
Thank you.
Please proceed. Yeah.
Our next question comes from the line of Akshat Mehta from Samishka Capital. Please go ahead. Mr. Akshat Mehta, your line has been unmuted. Please proceed with your question.
Hello?
Yes,
so
yes, you are audible.
I think the question was answered on nano fertilizer.
You have to be a little louder, gentlemen.
Hello?
Yes, please. Yes, go ahead.
Yeah, so I think one of my questions was answered on the nano fertilizer part. Secondly, I just want to understand in this fertilizer, you trade fertilizers, what is the kind of average margins that a company can make when we trade fertilizers?
Less than 5%.
Less than 5 generally. This is a normalized situation. Of course, it may depend on what the domestic price and the import price is, correct?
No, it has nothing to do with domestic or import prices. See, we manufacture roughly 1 million tons of fertilizer, okay? They're at full rate. Now, these are the controlled fertilizer. Both the fertilizer are controlled fertilizer. As far as international prices are concerned, the internal prices of only the feed affect us to the extent of urea production, which is close to 65% of the 1 million tons. The rest paid by the inputs, which is on the NBS basis, nutrient-based subsidy basis. So direct international prices have more or less no impact except the input prices of international prices.
Okay. Thank you, sir.
Thank you. Our next question comes from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Namaskar, sir, and thank you for the opportunity. Well, firstly, you did mention about the reason for higher power, fuel and fuel prices on Q-on-Q basis. So, taking into account the current trend, how is this line item going to shape going ahead?
Okay. See, there are like in energy basket, there are two main products. One is gas, another is coal, and third, to a very lesser extent, around 10% extent, the purchased power. Now, if you look at the prices on a spot, they have receded substantially of late. Okay, like somebody was asking and I said it ranges from 56 to 58. And somebody also asked a question, what has been the average of the quarter, which figure I did not immediately have, but now I have it around 85 rupees per standard cubic meter. Now your question of how it will further remain at what level, coal, we see some tapering down and gas also is expected to remain tapering down as we approach towards summer. But these are just guess estimate. We don't know much about how it will unravel. But as of now, we feel that our Q4 should be at least stable enough.
Okay, so there's a tapering effect that we will get going ahead.
Which effect?
Tapering.
Tapering down.
Okay.
Likelihood.
Yeah, it's a likelihood. I mean, this is what we foresee.
That is wishful thinking, you can say.
Yes.
Okay.
It's a close judgment, but then there are many factors. You know, so tomorrow again something happens and then they shoot through the roof. We never know all this. So when it comes to as far as the international market of coal, gas, and oil is concerned, as of now there is complete uncertainty. Various reports say various things. Like a few months back, people were saying when it crossed 100 per standard cubic meter, that even if it comes down in the near term, it is going to remain at an elevated level because of the continued war signals they are getting in respect of this Russia-Ukraine war.
You are correct in not predicting things, but since we are already 40 days into the quarter, so the trend line must have shaped up.
That is why we are saying it's a close estimate. Okay.
Then coming to the okay. Sir, coming to
what we think should be the way forward, and therefore we feel Q4 should be stable.
Correct, sir. Sir, and so now coming to our end product prices, when we look at our presentation at page number 3, so you have mentioned about the chemicals and the fertilizers and the installed capacity. So, sir, as per the turnover basis, what should be the order for our chemical segment?
Order of?
As per the turnover basis, ascending order of turnover basis, we have mentioned it alphabetically for the chemical segment.
So what is highest turnover contributing product is what you mean to say?
Yes, the highest to lowest.
Okay. We have our the chemical marketing gentleman, Sri Tejas sir. He will respond on this. Hello?
Yes, sir.
If we compare to these 9 months of this 22-23, AN Melt has generated more revenue. It is first product of GNFC. Second one is TDI. Third one is technical grade urea. Fourth is weak nitric acid. And fifth one is acetic acid and ethyl acetate, 6.
What was the first line item, sir?
First line item is ammonium nitrate melt. And melt.
And hello, yes, sir. When we look at the capex that we are envisaging going ahead, if you could give us an understanding how much capex is going for backward integration, so that the products which we are going to enhance the capacity would be capably consumed.
See, capex, we are putting 225 crore for
additional capacity of ammonia, that is 150 metric ton per day we will be adding. And WNA 3 and AN mill put together, it will be around 1135. So this is for backward integration, if you call it backward integration. And the other projects are, will be new investment, and there will be additional capacity we'll be building on.
Right, sir. Sir, when you mentioned that out of the extra cash generated, we are also putting into high yielding. What are you trying to convey, sir, by high yielding, other than the Gujarat State Finance Company?
No. See, somebody asked a question that with the change in interest rate on a higher side, whether your rate of interest has gone up or not. So response to that question, yes, it has gone up, because we first select the instrument based on the safety, and second is on the yield one. It is the normal investment in the time we make our actual investment for the business.
Sir, what is our exposure currently to the Gujarat State Finance? How much have we invested, and what is the yield, blended yield currently?
See, yield is, like somebody already mentioned, goes around 5.25%. And GSF's investment is to the tune of around 1,600 crores.
Okay. And other instruments where we have invested, it is the sole investment we have done?
No, we normally place GSFs as well as banks.
So what is yielding on banks?
It is little higher than GSFs as of now.
Okay. Is there any other commitment that we have from the government that we have to invest in Gujarat State Finance Corporation only? Or it is the prudent choice that the management is making on the basis of the risk criteria which you have already mentioned?
No, see, we have an approved investment policy based on which we make different choices considering these two criteria of safety and yield.
Okay.
There is no particular divergence because it's a board approved policy.
Okay. And also the tenure, sir, can you give an understanding? What is the tenure for which the amount, and we can...
Different maturity profiles depending upon the plan of CAPEX as well as the operating needs. So that is decided based on the internal cash flow, and it ranges between 1 year to 3 years.
Okay, because currently the sovereign government securities, the GSEC for 2 years, for 4 years, 5 years, and even 10 years are quoting well above 7.22%. They have the highest safety considering the Indian domicile. So so investment can be parked in the highest safety instrument of GSEC, keeping in mind that the yield to maturity, we have to hold the instrument till mature. So in easy 200 basis point extra interest income could be generated just on deploy the fund to government security.
Your point is noted. See, we have our own systems which are well calibrated. Top of it, there is an audit committee which is watching out as to what is happening to the investments and cash surpluses. But in spite of that, your point is noted regarding getting some 100 to 200 basis points above the normal one which we are getting as of now. Just for your information, we are also investing into government GSECs since last 3-4 months.
Right.
Okay, but what happens is the ticket size is not the same as we want.
Yes, sir. Now, now the market has opened up very well, so it's a very liquid instrument. We can deliberate on this. Yeah, thank you.
But ticket size is running into less than 50 crores at a time, more or less. Okay. And by the time we go to the market, that also evaporates. But in spite of that, we keep our try on. We invest in both GSEC as well as SDLs.
Right. Thank you, sir. Thank you.
Thank you. Our next question comes from the line of Nirav Jimudia from Annual Research. Please go ahead.
Thanks for the follow-up. Sir, you mentioned that just to the previous question, you mentioned the top revenue generator for our chemical business was ANML. So for 9 months FY23, if you can tell the percentage breakup also for all those 5-6 products, that would be very helpful.
See, these are like some of the questions, like your question is quite internal to the working of the company. And we don't reveal to the extent of the individual product level, the margins and percentages. So we stay away from this question.
Okay. The second question is on the capex is what you mentioned for WNA and ANML. So when these capacities will be commissioned, so ammonia, WNA and ANML. So if you can share the schedule of the capacities which we announced and which on the timeline for the commissioning.
All these projects will be commissioned by end of Q3, Q4 of year 25-26.
Okay. And sir, just a small clarification on the WNA volumes, what you mentioned, what we sold for 9 months, which you mentioned was 54,500 for 100%, right? So generally we sell in a concentration of 70-72%. So if we just do some record calculation, it is like 76,000 tons if we take 72% concentration. Am I correct?
See, Shri Tejas has indicated a volume of weak nitric acid of around 85,000 tons, which is sold.
Okay.
So that's 100%. So if you divide by 0.61, it will give you the ratio of total tonnage sold.
Correct. And so last year what we sold 112,000 was also on 100%.
Yes, we report on 100% basis only.
Got it. Thanks a lot, sir. Thank you for answering the question.
Thank you. Our next question comes from the line of Prayatan Mahajan from Blasmi Asset Management. Please go ahead.
Hello.
Yes, please.
Hi, thank you. Thank you for the opportunity, sir. So, to the prior questions where you mentioned the split of revenue, possible to give us a decreasing orders contribution on the EBIT also, business-wise, I mean vertical-wise? Just a directional, which one in the 9 months like you've given for a turnover?
Okay, I broadly answer this question. See, if you take like marketing person, see, Tejas has explained what is the order. Like he said, it started with a melt first, right?
Yeah.
So in terms of contribution also, as of now, it is the number one product. Okay.
So you're saying that contribution from TDI is positive, because I remember, sir, in the last call you said that it's loss making.
No. Contribution from TDI 1 is positive. Contribution during the quarter, even from TDI 2, is negative.
Okay. And the second question is, a more forward-looking question. You mentioned that you expect stability, given that now we have cost deflation, as an advantage to us. And as you mentioned that, TDI prices and other chemical prices are also moving up. Safe to say that we can maintain run rate earnings for the next 3 to 6 months, in your view?
We can talk about an outlook. We can't quantify a number.
Yeah.
Okay, and we already responded on that we are already somewhere in early February. So we see the outlook stable for Q4. Now, for stable, you can derive the meaning the way you want.
Right. Fine, sir. Fine. Thank you. Thank you so much.
Thank you. Our next question comes in of Bhavesh, an individual investor. Please go ahead.
Thank you for the opportunity again, sir. So I just wanted to check on this contingent liabilities. So what is that, and any update on this that I noticed, right? Is that case dismissed or is it still open?
You are talking about the Department of Telecom related contingent liability.
Yes.
So there is no change in terms of the status.
Okay. And we also made some provision for that, right? I mean, provision for contingent liability. What was that?
Okay. If you see, DOT liability is not the part of contingent liability at all. There are liabilities other than DOT liabilities which are part of the contingent liability. For example, urea diversion case. For example, natural gas issue going on with GAIL. The third example is issue of insurance going on with NIA. These are the three major ones in the contingent liabilities.
Okay, sir. Thank you so much.
Thank you. Our next question comes from the line of Nishit Shah from Equators Investments. Please go ahead.
Good evening, sir. So I'd like to understand how are the imports trending in terms of volumes and price?
Of which product?
For our major products.
Okay, sir. Shri Tejas Shah from marketing will respond on this industrial products.
As you might be knowing, we are only manufacturing acetic acid in India. So, if you consider acetic acid, around Indian demand is 12 lakh tons, and we are producing 1,50,000 tons. So, we are only catering 15% market. Same way in formic acid also, we are the only manufacturer of formic acid. So, 41% market we catered and rest is import. Same way in aniline also around 31% market we catered and 69% is import. TDI also we are catering 65% market. TDI also we are the only producer and 35% is import. These four major products are getting imported.
Rest of the couple of them like aniline, we hold a market share around 28 to 30%, and in the technical grade we are almost around 45%. So, your question was on the import scenario up to 9 months, but more or less these are the numbers on an annualized basis. So the figures can be derived based on our responses for each of the product. And the last one is methanol. Methanol, like neither we nor RCF nor GSFC manufactures considering the gas prices. So around 2.3 million tons of methanol is the requirement of the country, which is met with import.
Okay. So, sir, the rest of the volumes which are imported, are we seeing any significant price reduction and that is leading to our realizations going down?
See, all our products except ethyl acid are priced based on the import parity price only. Okay. So, if you see the performance reasonable better, then we have no choice but to compete with these people.
Okay.
And these are the companies of much wider standings. You take the case of, for example, TDI. They are the likes of Dow. They are the likes of BASF, Covestro, etc., who bring the product here either through China or through Malaysia or at times even through Europe.
Okay. And sir, last time I made a request on the conference call itself for a management meeting, and I was in touch with the investor relations department, but I didn't get any response. So, sir, is there any mail ID or somewhere possible where I can request my meeting?
Yes, you can put your request to me, AC Shah at gnfc.in.
Okay, I'll do that, sir. That's it, sir. Thank you.
Thank you, sir.
Thank you. Ladies and gentlemen, we have reached the end of the question and answer session. I now hand the conference over to Mr. D.V. Parekh for closing comments.
So I'll request Sri A.C. Shah, the Company Secretary and General Manager, to take it further.
Yeah, we thank the participants to make this investors Concall meet a very bright success. And as we all know that the performance of the company is on the improving trajectory, over a period of time, and we expect same trend to continue in the times to come. At the same time, we thank Anurag Services LLC for arranging these arrangements for this Concall meet, and also my colleagues who participated and attended and addressed all the queries of the participants. So, wish you all the very best. Thank you once again.
Thank you, sir. On behalf of Gujarat Narmada Valley Fertilizers and Chemical Limited, this concludes our conference. Thank you for joining us, and you may now disconnect our lines.